Alright, let's dive into something that's been bubbling up in the financial world lately. The Australian dollar's recent weakness against the US dollar. Now, if you've been keeping an eye on the markets, you've probably noticed that the Australian dollar to US dollar pair has been inching lower, hovering around 0.7060 during the Asian trading hours on Monday. But what's really going on here? Personally, I think this isn't just about numbers. It's about the bigger picture, the global sentiment, and the intricate dance between economies. First off, what makes this really interesting is the role of the US dollar as a safe haven asset. With geopolitical tensions ramping up, especially between the US and Iran, investors are flocking to the greenback like it's the financial equivalent of a storm shelter. The Strait of Hormuz situation is a powder keg right now, and even though there's talk of diplomatic progress, the market isn't taking any chances. This risk-off sentiment is hitting the Aussie dollar hard, and it's a reminder of how interconnected our world is. Now, let's talk about the U.S. employment data. The latest non-farm payrolls report was a shocker, a drop of 23,000 jobs in July, with downward revisions for the previous months. This has everyone questioning whether the Fed will hike rates anytime soon. In my opinion, this is a double-edged sword for the AUD. On one hand, weaker U.S. data could ease pressure on the Fed, which might soften the USD. But on the other hand, it signals broader economic uncertainty, which isn't great for riskier currencies like the Aussie. Speaking of the Aussie, all eyes are on the Reserve Bank of Australia, RBA, this week. The consensus is that they'll hold rates steady at 4.35%, but what really matters is the tone of their statement and Governor Michelle Bullock's comments. One thing that immediately stands out is the RBA's delicate balancing act. They're trying to keep inflation in check without stifling growth, and that's no easy feat. What many people don't realize is that Australia's economy is heavily tied to commodities, particularly iron ore, and the health of the Chinese economy. China, as Australia's largest trading partner, is a massive wild card here. If China's economy is firing on all cylinders, it boosts demand for Australian exports, which strengthens the AUD. But if China stumbles, the Aussie feels the pain. Iron ore prices, for instance, are a huge driver. They account for a staggering $118 billion in annual exports. When iron ore prices rise, the AUD tends to follow suit. But here's the kicker. What this really suggests is that the Aussie dollar is at the mercy of forces beyond its control. If you take a step back and think about it, the AUD is like a barometer for global risk appetite. When investors are feeling bold, they pile into riskier assets, and the Aussie thrives. But when fear takes over, they retreat to safe havens like the USD, leaving the AUD out in the cold. This raises a deeper question. How sustainable is this dynamic in the long run? Strategists at Rabobank think there's still a chance for one more rate hike from the RBA this year, possibly in November. They're also forecasting a modest upside for the Australian dollar to US dollar over the next 12 months, mostly because they believe the USD's strength is overdone. Personally, I think this is a bit optimistic. While I agree that the USD might soften, the Aussie's fate is tied to too many variables: China's growth, commodity prices, and global risk sentiment, to call it a sure bet. A detail I find fascinating is how the RBA's policies influence the AUD. By setting interest rates, they're essentially steering the economy, but they're also at the mercy of external factors. For example, if the Fed keeps rates high while the RBA holds steady, the USD could continue to outperform the AUD. But if the Fed pivots, the Aussie might catch a break. In the end, what this all boils down to is uncertainty. The AUD's weakness isn't just about one thing, it's about geopolitical tensions, economic data, central bank policies, and global sentiment all colliding at once. From my perspective, this is a reminder that currency markets are never just about numbers. They're about stories, about fears, about hopes. And right now, the story for the Aussie dollar is one of caution. So, here's my closing thought. As we watch the Australian dollar to US dollar pair dance around these levels, think about what it means for the broader economy. Are we heading into a risk-off world, or is this just a temporary blip? Personally, I think we're in for a bumpy ride, and the Aussie dollar will be one of the first to tell us where we're headed. What do you think? Let me know in the comments below. I'd love to hear your take on this.